Officer of KFin Technologies. On behalf of KFin Tech, we thank you for taking on time and joining us for today. We welcome you to the hybrid press conference on the announcement of KFin Tech's forthcoming IPO. Before we begin, I would like to introduce the management and distinguished guests who would be addressing today's gathering. From the company, we have with us Mr. Srikanth Nadella, Managing Director and Chief Executive Officer, KFin Technologies. We have Mr. Vivek Mathur, the Chief Financial Officer, KFin Technologies Limited. Mr. Amit Murarka, Head Global Business Finance, M&A, KFin Tech. And representing the BRLMs, we have Mr. Mohit Pandey, Managing Director, Jefferies India Private Limited. Mr. Abhinav Bharti, Managing Director, JP Morgan India Private Limited. Mr. Prem D. Kunha, EVP, Head ECM, ICICI Securities Limited. We have Mr. Gopal Khetan, Executive Director, FIG, Kotak Mahindra Capital Company Limited. Mr. Manish Jain, Associate, IIFL Securities Limited. There's been a slight change. Instead of, in place of Mr. Manish Jain, we have Mr. Vishal Bhangat from IIFL Securities Limited. Post the presentation, we will welcome questions. And for virtual attendees, request you to please type the questions in the Q&A panel available to you, which will be read out to the management on completion on the presentation. Before we begin this roadshow, we would like to run a short corporate video.
Thank you very much, Anisha, for that introduction, and good afternoon, ladies and gentlemen. On behalf of KFin Technologies Limited and the book running lead managers to the issue, I would like to welcome you all to this conference and introduce you to this unique company. KFin has built technology-driven financial services platform, providing comprehensive services and solutions to the capital market ecosystem today. KFin is the largest investor solution provider to the Indian mutual funds, basis the number of AMCs served. It has a 46% market share in issuer solution businesses. Some of the salient features of this unique issuer are as follows. Scaled platform with strong track record of growth and leadership, delivering faster growth compared to its peers, serving about 26 out of the 43 AMCs in India active today. Diversified multi-asset platform expanding across Southeast Asia also. Deeply entrenched and long-standing relationship. I think there will be hardly few of us who may not know of this company as far as servicing of investors is concerned. I will now introduce you to the people on the dais. I think if I can just take it on the PPT. So on the dais, we have Mr. Srikanth Nadella, the CEO and the whole-time director of KFin Technologies Limited. We have Mr. Vivek Mathur, the CFO of the company. We have Mr. Amit Murarka, the head and global finance, M&A and investor relations head. Besides that, we also have our colleagues from the other investment banks, my co-colleagues here. I'll give you some more details on the issue. The issued entity is KFin Technologies, proposed to be listed on NSE and BSE. It's 100% OFS, so there's no primary issue to it. There's no money which is going into the company. You have a very reputed promoter of this entity, which is General Atlantic, who is the sponsor and the promoter of this entity. The BRLMs to this offer is ICICI Securities, Kotak Mahindra Capital Company Limited, JP Morgan India Private Limited, IIFL Securities Limited, Jefferies India Private Limited. Out of the issue, 75% of this issue is reserved for QIBs. Out of that 75%, 60% is earmarked for the anchor investors. You have 15% of the issue for HNI and 10% of the issue which is earmarked to the retail. The date of the issue opening is 19th and the date of the issue closure is December 21st. And with this, I would like to now call upon Srikanth to take you across with this unique journey of this issuer and it's standing across in the market. Srikanth, if you can please come in.
Sure. Thank you, Prem. Sure. Control it. This is on our website. Thank you. Very good afternoon and a very warm welcome indeed. Thanks a lot, Prem, for introducing us. Thank you, Hanisha, for bringing us all together here. And a warm welcome to everyone who's here. Thank you so much. My name is Srikanth Nadella. And over the next 20 to 25 minutes, I try to bring you a sense of appreciation about KFin Tech, its growth strategies, and a little bit about our historical performance as well. Post which we will leave the floor open for question and answers. By way of introduction, I go by Srikanth, and you have already been introduced to my colleagues, Vivek, Narayan Mathur, and Amit Murarka. Now, KFin Tech, we work in a very specific and nuanced area of operation. Not something that is fairly ubiquitous, but broadly as an entity, we've been there for about 35 years plus. The business that we've been running, known to be the largest share transfer agent in the country. We manage close to 5,000 plus corporates. We've taken several hundreds of corporates to go listing. We are, of course, ourselves in the journey of being listed at this point in time. We started, venturing into the investor solution side of it, which effectively covers asset classes such as mutual funds, alternate investment funds, private retirement schemes, pensions, portfolio management services, effectively every asset class that you could possibly think of. We have since then, created a global center of excellence to manage mortgage book for one of the largest mortgage management agencies in the world, that's based in Hyderabad. We have also along the way realized that the work we do and the platforms we built and the solutions we've created are just as applicable to several countries beyond India as well. And that's when we started our aspirations to grow global. Sometime around 2017, through a small acquisition, we have initiated our international operations starting in Malaysia. We have a domicile entity in Kuala Lumpur. And we today manage clientele across the stack of Malaysia, Philippines, Hong Kong, and soon to start in Singapore as well. Now, 2018 marked a very important milestone year for us when General Atlantic Partners bought out the controlling stake in our company. And with that started the transformation of our company, so to speak, right? 3 definitive strategic objectives, first of which was to professionalize the entity. By that, what I mean is, what was otherwise more a proprietary-driven concern has been transformed into a full-fledged professional entity with an independent board and a professional management. Some of us, whom you see here, have joined ever since then. Personally, I come from technology background, being a managing director at Accenture prior to being here. And the second aspect of in the strategic, intent was to transform the entity technologically, which is otherwise more, front, middle, back office transaction processing agent. What we really wanted to do was to transform ourselves into a full-scale TechFin company. And that's what our journey had been. I'll explain to you along the way what we've done in that space. The third component was we have seen, white spaces. We have seen areas of faster growth. Given our unique platforms and the domain skills, we believed we have the ability to not just grow organically, but also through the route of acquisitions. We have since then acquired, 3 odd companies, one of which, consummated just as recent as February of this year, called Hexagram. Prior to that, we have consolidated some space in the registry business when we acquired BNP Paribas Sundaram's captive RTA. And of course, we have a board constituted committee, which regularly looks into, more opportunities that we have in the space to acquire further companies along. So to sum it all up, 35 plus years in the making, every asset class, from equities to, mutual funds to pensions, alternatives, private, portfolio management services, we render a series of solutions across the liability side of the book, which is effectively the investors or the shareholders, and on the asset side of the book, which is effectively the fund accounting administration. Through this, we are able to provide the holistic solutions and services for any asset manager, so to speak, right? In addition to this, as I said, we also manage the mortgage book, which effectively sums up nicely in our global business services. This is a space that you'll be familiar with. We are in the space of market infrastructure institutions. Effectively, there is hardly any transaction that gets processed, when you buy a share or when you, purchase a mutual fund unit or sell it without necessarily going through some of the names that you see there, the exchanges and the clearing corporations, the depositories and the registrars are nicely plugged there, right? There are 3 qualified RTAs, one of whom is us. Our competition in the form of Issuer Solutions is Lincoln Time. They are a qualified registrar and transfer agent, which is a special class, reserved for the entities which have scale, and CAMS, of course, for the mutual fund side of things. KFin is the only RTA in the country, which is a QRTA, qualified registrar and transfer agent for both Issuer Solutions as well as the investor solutions, so to speak. Now, why is that is, who we are, how do we engage with the clientele and the market is very important. We engage largely on as a service model. We are, with a tech first company, broadly on the right-hand side, you see some disposition and color about the kind of revenues and, financials. So, most of our revenue is annualized and recurring in nature. We are extremely proud of our lineage of logo retention, and, we continue to drive, profitable business with the gross margins of around 60% plus. On the left-hand side, you see a whole lot of products and platforms we have orchestrated over the past 3 to 4 years. This is a component of the tech transformation I was talking about, the first of which was largely to reorchestrate and recreate a platform which is necessary for the next 10 to 20 years. We have seen a massive explosion of the volume increase, the transaction increase, and the data that it subsumes underlying it in terms of, for us to process it. Now, such a platform, what has been built, obviously what has been built in the past does not necessarily mean it will, last for future. So we have re-architected and we continue to, invest in that. The second component of the tech transformation is to create a whole lot of platforms which are created for the sole purpose of our clients to grow faster. Our commercial model largely subsumes the growth of the client equals our growth and vice versa. And in that scenario, these platforms have been helping definitely our clients, win a higher market share, which I will, exemplify in just a second from now. Right. The third component, of course, was given the end of the day, we are largely a transaction processing agent, processing over 1 million transactions a day. We have to drive operating leverage. And what is that we've done in that space? I'll walk you through. So as an entity, these are truly our strengths. We are a scale platform operating at Bharat scale. We cut across every asset class. We are a multi-geography, a highly diversified business, which gives us the right kind of moat and protection, in times when a particular asset class or the markets may or may not work in your favor. But then this kind of a diversification has been truly helping us outperform ourselves year after year, as well as outperforming the peer group. It's a as a service model, one of the most progressive commercial model that you would see, which basically mirrors the growth of the client. And, we truly partake both the growth and the degrowth of a client should it ever happen, being a true partner. Our relationships are deeply entrenched. Many of my clients have been there with us for more than 20 years. It speaks volumes about our partnership. We are, for all practical purposes, in the extended operations arm for many of these asset managers, and we cherish that relationship. We are also asset-light business model. It's largely people is my truly only asset that I have. The rest of it is just a little bit of software, if I may. And with that kind of a model, comes with its, innate advantages in terms of the amount of cash flows we could generate year after year. And our team itself had been, fit for purpose over the past 4 years ever since General Atlantic came into picture. To quickly subsume some of the numbers, they're out there for you to see. We're the largest, registrar and transfer agent in India for investor solutions, as per the CRISIL report, by the number of asset management companies, we manage. 24 out of 41. We have had a track record of wins, which we are proud of. We won 15 out of the last 21 mutual fund companies that have launched in India. Of course, our bigger peer, CAMS, has the larger share in the form of AUM, but we continue to have enhanced market share gains that we've been seeing over the past 2-3 years. Equity AUM market share about 35%. That is what's for you to see. Whilst investor solutions on mutual funds and issuer solutions have been traditionally our bedrock and the foundation for our growth, over the past 4 years, we have carefully and purposefully orchestrated growth of new engines of growth. One of which it is the international expansion, especially in the Southeast Asian markets, followed by us securing the license to become one of the central record keeping agencies in the country to administer the national pension system for PFRDA, as well as expanding our product and platform solution portfolios into other asset classes such as alternate investment funds, portfolio management services, whilst expanding our overall service portfolio, which also now covers the fund accounting administration in addition to just pure transfer agency work. This speaks about broadly our growth vector. Our nearest competitor, this is a 2-year CAGR of top line growth. KFin has grown, as you could see at the bottom of the stack. Apologies for that. 25% plus on a CAGR of top line growth over the past 2 years. What's important, for us all to understand is what are the reasons for the, outperformance in terms of the industry and the peer group, and more importantly, is it a sustainable one? Our clients growing far faster helps us, and there are definitely reasons as to why my clients are growing faster. One of which I have articulated is effectively some of the products and solutions we are able to create. But of course, all of the credit goes to my clients for them to have been creating a significant outperformance at a scheme level. Of course, continuing additional and faster win rates always helps you in chipping away additional market share, which is what has helped us to get another 260 basis points of faster expansion. The past products and sale, this is a business where we are largely dependent on our clients' growth, but this is our specific involvement to make sure that there is a certain amount of controllability, and that is effectively what we manage to orchestrate through creation of a sequence of products and platforms which are sold and solution and service akin to that of a pure play IT company, so to speak. And those have also, in a very short period of time, helped me outperform my peer group by about close to 180 basis points, so to speak. Quickly moving on, these are the this is a market share expansion that you see in terms of the AUMs, right, over a 2-year period. KFin Tech's AUM, or rather our clients' AUM in terms of market share, has increased from 27 to 31% in a matter of 8 to 10 quarters. What's important, of course, is to track to what is the equity component in it, because that is truly what is the revenue bearing component, both for the client as well as the service providers for such as us, which has seen faster growth from 29 to 35%. SIP market share, we stand at 42%, which is a very important parameter, which is the sticky part of the overall AUM. And on the left hand side, you see effectively the disposition of several of our clients' funds outperforming the other industries' funds, so to speak. Why is this happening? I think a large component of that is the fact that many of my funds are younger and a malleable corpus of funds, which helps them to generate the right kind of alpha. But that needs to be still, captured in the form of customer acquisition and retained, and the churn minimized. That is where KFin Tech comes into play in terms of the platforms and products we've created, in addition to the fact that a large portion of mutual funds and the assets are sold even today by intermediaries who play a very important role. And a series of platforms, again, and the work we've done for the intermediary ecosystem had been helping us to have a faster growth for our clientele, so to speak. This is, representation in terms of, onboarding of newer clients in the case of mutual funds, and in the case of issuer solutions. We are, proud to have added a little over 1,000 corporates in our issuer solutions, over the past 2 years, both in terms of listed and unlisted space. Close to 46% of companies enlisted in Nifty 500 by market cap are, solution and serviced by, KFin Tech. And that's a very proud tradition, starting from the largest company in, listed in our stock exchange to the smallest company in unlisted companies serviced by KFin Tech. In terms of our expansion, I have mentioned that one of the strategic intent, after General Atlantic Partners, acquisition of the company, was to grow, faster, looking at inorganic routes as well. And one of that was through the mergers and acquisition route. On the slide, what you see is effectively the lenses that we wear when you look at potential, M&A opportunity. One of that could be, will an acquisition help me add a sizable client and go associated with that the commensurate revenue and margin profile? Yes, we look at opportunities such as that, and that's what we've done when we bought out BNP Paribas and Sundaram's captive RTA. And second is market entry access. Very, very important, as I said, given the work we've done over the past decade or so, helped us to position ourselves, not just as a pure play Indian market infrastructure institution player, but also one who is globally relevant. Our market entry access into our Southeast Asian work started with a small acquisition, which has spawned, acquisition of close to 25 clients over a period of the last 4 years, and increasing our revenue base, close to $4 million. The third of that, of course, is to expand our product and solutions portfolio itself. When you think about a registrar, what you're really looking at is an entity which processes transactions for the investors, right? Whether it is mutual funds or stocks or anything at all. Now, for an asset manager, there is the asset side of the book, which is basically managing their investments, which translates into fund accounting and administration. By our acquisition of Hexagram, which has one of the marquee platform called Empower, we now are the only entity in the country, and probably in many parts of the world, who can render a holistic solutions of transfer agency, fund accounting, administration, digital, and analytics associated with that. We continue to look at many an opportunity in this space, and we run a very strong process, our board-driven committee process through our business development and strategy committee, for us to evaluate any M&As and take necessary steps. I've been talking about technology, and if you see on the left-hand side, that's a corroborative evidence in terms of our intent, not just intent, but fully backed by the amount of investments we made in this space. From about close to 50 crores, per annum in FY20 to 130 plus crores in FY22. Already half year we spent about 80 crores, on an annualized basis. If you could just do the math, you're really talking about a 4-fold increase in technology spent by an organization. This is reflective of the intent. This is reflective of the commitment of both the shareholders and the management to transform this company to be one of the foremost TechFin player in the space that we operate, not just in India, but abroad as well. I spoke about international expansion. This speaks about the number of clients, over a period of time we have added. We've been a late entrant into the national pension system. but in a very short period of time managed to secure about 5% plus of the market share as we moved from roughly 200 odd, to 800,000 plus, pension subscribers in the country. And of course, this is both an organic route as well as, a step change that is possible as you win the state and central government mandates as well associated. Alternate investment funds, we are extremely confident. This is a space that will outperform probably every other asset class. Over the last 5 years, AIF industry had grown over, on a CAGR of 50%, and probably will continue to grow, as per the CRISIL report for a foreseeable future as well. We have secured mandates for 301 funds out of 800 plus odd operating alternate investment funds in the country, and also being one of the few partners who can do both transfer agency fund accounting in addition to digital. We have also initiated and solutions our offerings into the gift city in addition to rendering similar services in the case of international markets. This is broad brush of the addressable market in international. If you add up the total addressable market, it's about $1.2 trillion. You compare that to Indian market mutual fund, which is roughly about $550 billion. What you're really looking at is 2.5 times of potential that exists in India being available in these geographies. Today, we have clients in Malaysia, Philippines, Hong Kong, and soon to start in Singapore. We are intentful of securing clients in Indonesia and Thailand, hopefully. And this provides us a very unique opportunity to expand our business and looking at an addressable market, which is far larger than that of India. Not India continues to be our bellwether, our most critical focus, but we believe we can orchestrate another KFin Tech equivalent organization just focusing on some of the additional geographies. We have a proven track record of being there for over 5 years, fully registered and regulated by the local entities. And we are now talking to some of the larger asset management companies to convert them. Quickly moving on, in terms of, our entrenched and the long-standing relationships, you might have seen that, close to 50% of our revenue comes from our top 5 clients. We cherish those relationships. It's not a risk. It is something that we are proud of. Having said that, obviously a faster expansion of many of our younger and faster growing businesses automatically will mean the share of the fewer clients as a proportion of the total revenue will keep coming down. But of course, the revenue we generate from the same client year after year continues to expand, as you could see here. From the mutual fund industry, it's about 12%, more. In the case of Issuer Solutions, it's almost 24% more in terms of the revenue generated from the same clients in the previous year. Our expansion of gross margins and EBITDA is there, and the PAT numbers are self-explanatory over there. I think over the last 3 years, courtesy faster growth, courtesy of significant technological interventions, which has brought in a good amount of operating leverage. So which meant that we have optimized our costs both at a payroll level as well as on expenses level, has increased our gross margin numbers from 51% to close to 61%. Our PAT numbers have increased, simultaneously from 15 to 24.12% for the 6 months ending September 2022. We have a healthy financial profile. I'll request Mr. Mathur to explain that in a second from now. Management team, we broadly spoke about it. We have a fit for purpose management team. Many of us are, have been in the system since General Atlantic came into, acquired the stake. We have now, again, a fit for purpose, country level leadership strongly, available in Philippines, in Malaysia, in Thailand, in every one of the operating geographies that we work in order to capitalize the momentum in terms of the client acquisition and faster growth there. Our board itself, had been independent. We've been operating pretty much like a listed company, if I may, for the past, 4 to 5 years. Our chairman, Mr. M. V. Nair, also the current chairman for TransUnion Civil, eminent banker, ex-CMD for Union Bank of India, Mr. Prashant Saran, was a ex-full-time member at SEBI, provides us a guidance. Mr. Kaushik and Sonu, bankers, and the remaining nominee directors. And of course, from a shareholder standpoint, you might have seen it's largely General Atlantic, a majority-owned company, but we have marquee shareholders in the form of Kotak Mahindra Bank and a few others as well. Now, as a company which operates in multiple countries and fully regulated, by MCA, by SEBI, by PFRDA, and the equivalent regulators in each of the other operating geographies, it is but important. Probably for me, this is the most important aspect of it all, honestly, to be making sure that we stand compliant and we make our clients stand compliant at all points in time. We have all the necessary certifications. In addition to this, we recently have gotten ESG certification done, which puts us amongst the best in the country. And we track 2 bit-side scores, which are extremely important for InfoSec and data security standards, which positions us at about 770 out of 800. To sum it all up, this is very simple, growth strategy, nothing complicated. All we want to do is continue to do, stand by our clients and offer excellent value to on a day-to-day basis. What that has done for us in the past, which I'm sure will, help us in the future also, is that it will help us to win more clients because the younger, newer clients would want to hear what the existing clients have to speak about it. Our win rate, if anything, corroborates our claim in terms of how satisfied our clients are. Now, we will continue to expand our base, not just in India, but abroad. And largely all of this we're going to accomplish through significant investments in technology at scale. We will continue to be very selective, focused, but drive our international expansion. Aspirationally, we want to be, probably one of that first few companies from India who has the vision and aspiration to become a global player in this tiny little space that we operate in. And, all steps are in the direction. And of course, that is not something that, we're going to accomplish purely by organic play, which may take time and hence an organic path. So with that, I'm going to, request Vivek to broadly call a bit of financials, and we'll throw the floor open for questions. Thank you.
Thanks, Shrikant. So whatever Shrikant talked about in terms of strategy and execution gets reflected in the financial numbers of the company. So as you will see that, we have grown continuously year on year, and for the 6 months ended financial year 2023 ended September 30th, 2022, we clocked a revenue of 348 crores. And that's a jump of about 19% year on year. The composition of the revenue is largely 68% comes from mutual fund, about 13% comes from issuer solutions, another 13% comes from international business and investor solutions. And, the other businesses like small businesses contribute about 5% like KFin pension, and the vast revenue is about 5%. So it's a very diversified kind of a business where we have been growing the other businesses besides domestic mutual fund. And, currently the growth in other businesses like what Shrikant mentioned, the Southeast Asia business, which is based out of Malaysia, and other businesses like AIF and pension are booming businesses, which will contribute in terms of growth of the business. 99% of the revenue is recurring in nature, and it's quite predictable based on the loyal customer base that we have been servicing over the number of years. The PAT margin adjusted for Ind AS is 24%, 24.12%. And we have seen that this is something which has been growing because of the operating leverage. If you look at last year results of FY21, the expenses came down and revenue went up. That was a year of really turning it around. And now in FY22, we actually took it forward. And half year ended September 22, you see 24% PAT. The client retention, as Shrikant mentioned, has been because of the cross-sell and upsell and the growth that our clients witnessed in their businesses has helped us in terms of achieving 112.62% of net revenue retention. And we have 98.6% logo retention. It comes with the various technological innovations which have been done, and investment which has been made in technology that our clients are able to use our services beyond the normal pure RTA chassis. We are an asset-light model, and you will see that, the conversion of EBITDA to EBIT is around 87%, which is helping us in terms of generating free cash flows. And we continue to invest those cash flows in, doing acquisitions as well as in terms of investment in technology. And we do exercise discretion when we do these expenses. If the market inflows are topsy-turvy and we feel certain shocks are going to come, then we do exercise discretion on the discretionary expenses and cut them down to maintain the trajectory of growth and margin that we have been demonstrating. The return on capital employed is 20.71%, and the return on equity was 24.7%. And this is something which we have seen a growth over the period, as it was in FY21 about 23%, and now it is more than 24%. So that's where, ladies and gentlemen, where we are. Happy to take questions now. Thank you.
A few moments, please. Thank you. Thank you, Mr. Nadella and the team for the brilliant presentation. Of course, we will now open for Q&A, but just wanted to make a quick request that this is also a physical as well as a virtual press conference. So our colleagues who are connected online, please put up your questions in the Q&A panel. We will try our best to take all the questions. And before anybody puts up a question, may I also request you to introduce your name as well as the media house that you represent. Mike, please. So whoever is raising question.
I'm Sarfaraz Arzu. I'm from Hindustan Daily. A very basic question. What is the client base that you are servicing? Probably in absolute numbers or near absolute numbers.
Thank you, Mr. Sabras. Our client base, needs to be looked at from the lens of individual lines of businesses. Domestic mutual funds, we manage 24 asset management companies. In terms of our issuer solutions, where we service the corporates, we have 5,000 plus companies that we service today. Our international business, where we again support asset management companies, today we have about 24 asset management companies and 2 signed and yet to start the operations. Our mortgage book is largely one client, so to speak, and our alternate investment fund, I've already called out, close to 301 funds we manage in India.
Mike, yeah.
Good afternoon. My name is Geetanjali Kedia. I'm from SP Tulsian Investment Advisors. Why is the promoter selling less? In the RHP, it was 2,400 crores around March, and now it's reduced to 1,500 crores. What's caused the reduction in shares offered by the promoter?
Sure. So the bankers have had discussions with the investors, and like any process, we have to gauge the market sentiment as well as for need to divest. The bankers have, based on the understanding of the investing appetite, have recommended to our board and to the shareholders in terms of the issue size.
And how is 75% allocated for QIBs? The company has been making 15 crore plus operating profits for the past 3 years. So under what criteria did it not meet the requirements for 50% QIBs?
So on this particular question, I think besides the 15 crore requirement on a pre-operating profit, there are some other criterias also which are there. And one of the 5 criterias of SEBI, which is required to be on a 75% reservation for QIB, was not met. And that's there across in the RHP also. And that's the reasoning why this is a 75% QIB category.
Can you state the regulation which is not met, the criteria which is not met?
I'll just check and yeah.
Sure, thank you. The depreciation is reduced from 98 crores up to 21 to almost 37 crores in FY22, and that's the run rate now. What's caused this sharp reduction in depreciation?
So Gitanjali, we were amortizing goodwill until FY20. But from 1st of April 2021, we aligned to Ind AS completely. Under Ind AS, amortization of goodwill is not allowed. That's why you see a reduction.
Finally, last year, the primary issue was done to Kotak Bank at 185 per share. So that's almost at a PE multiple of 26 times if I look at on a TTM basis. And now the pricing in the IPO is almost 37x. So what's caused the jump? I know the PATs have increased, but what's caused the jump in the PE multiple when it's a secondary issue now versus the primary then?
So that was a primary issue based on past results at that point of time. And if you see the KPIs of the company and the improvement in KPIs of the company after that. So if you look at FY21, FY22, and the current half financial year, the KPIs have improved significantly. And there were, couple of off-market deals which are available to be seen in the RHP, which have come through at a slightly higher rate than what is given in the IPO band. So, 2 independent parties have actually exchanged about 1.5% shareholding with the promoters at a slightly higher rate than what is appearing in the IPO band. So that should give you comfort. And that's a process that we have run where the BRLMs have tested the market. They have taken feedback from interested institutional investors, and it's a book building process. So, besides the KPI, the market looks at it independently, and that is what is driving the price, what has been arrived at.
So that is precisely my question. The secondary sale is happening at a higher price versus the primary, which happened at a lower price. The primary was priced at a PE of 26 times versus even when the peer was ruling higher. So, why is, company primary issue at a lower valuation versus a secondary?
There's also a difference in timing. Of course, the primary issuance was done quite some time back, right? One. And of course, if you see the performance of the company over the time period also, there have been changes in that. All that taken into account, I think the company has done an extensive round of marketing. And you have several institutional investors interested at this price that it's coming at in the IPO. Thanks.
Thank you.
I am Sani from Business Standard. So my question.
Change the mic, please.
I am Sami from Business Standard. My question is pertaining to the erstwhile promoters. Are there any pending liabilities or sort of litigation which could impact financial of the company adversely going ahead? And also the treatment of this 40% shareholding, will it be classified as promoter holding or ordinary shareholding, and which are owned by the erstwhile promoters?
Sure. Thanks a lot for that. See, KFin has taken a series of immediate actions post the situation with Karvi Stockbroking. Yeah. Now we must recognize that these are two very different companies altogether. The delineation and the separation meant that whether it was a management level engagement at a board level, or even any operational level engagement, including, for example, any data centers, etc., have all been de-linked within just a matter of few months. We no longer are a group company, haven't been so for a long period of time. Whichever cases are there on the erstwhile promoter have been duly disclosed in the RHP. We believe that none of them will have any material impact on KFin. In terms of the lock-in of those shares, 6 months will be the lock-in period.
And they're not part of the promoter group.
Hi, Hamsini from the Hindu Business Line. In addition to Sami's question, I believe the current team at KFin did meet ED somewhere in September last year. Do you expect that for the proceedings of the case, there will be more engagements that could possibly have a rub-off on the equity price once the company is listed?
Sure, Hamsi, thanks. It was me who met the ED. And it is a process whereby any enforcement, would take the management into confidence in terms of some of the decisions they may take involving, the company. It was a procedural and a routine matter. Will I be called again in future? Could be so, but it has no connection whatsoever in terms of the company. If anything, the freezing order that has been issued post which, if you've read it, you will not find the mention of KFin or its management anywhere in that.
I presume over 50% of your contracts right now are concentrated among the top 3 clients, top 3 or top 5 clients. And these are fixed contracts. I'd like to understand they're fixed for how many years, and typically going by past experiences, have you ever seen a case where some of your old contracts don't get rolled over, or is there a holidaying or a cool-off period before which you can once again approach your old client for a new contract?
Sure. Hamsi, I think the information is there in the RHP. The top 5 clients contribute to close to 50% of revenue. The contracts are typically stylized, to be renewed anywhere between 3 to 5 year period. And so far, over the last 2.5 decades, all my client contracts have been renewed. So as of 30th September.
I had one more question. Do RTAs come under the definition of MIIs? And is there a risk that going ahead, they could be classified as MIIs, which could increase the regulatory burden on the company?
No, we are not officially MIIs. We are a subclass, but in the similar space as MII. We are called the Qualified Registrar and Transfer Agents. The regulations that are applicable to MIIs are not applicable to us.
Also, is BSC your competition, since almost more than 2/3 of your revenues are from mutual funds. So the way BSE's mutual fund platform is growing, is that a threat or a competition for the company?
No, it is neither a threat nor a competition. It's an enabler. So Star MF platform allows a broker and a member of the exchange to have their investors' trades put through their platform into mutual funds. And those mutual funds are effectively my clients, which effectively translates to their enhanced AUM, which results in a direct revenue for us. So none of them are a competitor to us. They're all enablers and part of the ecosystem.
Thank you.
I just want to add to the earlier question. The question that you asked on the enforcement directorate is sub judice. So we are not allowed to comment on that. But having said that, the lock-in is more driven by the attachment by the enforcement directorate on the shares held by that group in KFin Tech. And that is the limited attachment that we have and the engagement that you can say as shareholders the CP Group has. General Atlantic is the promoter of this company. And, that has been since they invested and they acquired in 2018 about 83% stake. So there is no bearing of the erstwhile promoter group on this company. Thank you.
Mike over there.
Hello, sir, I am Jaykumar from Kaupati Group. Have you got any pre-IPO offer from any companies?
There is, this is a secondary trade which happened. There is no pre-IPO placement. This is an offer for sale. So there is nothing which has happened as a pre-IPO placement that the company has done.
Okay.
There are few questions from the virtual colleagues who have joined us. Mr. Dilip Davda, consulting editor, chittorgarh.com. Series of 4 questions. What will be the promoters holding post IPO? What is your take on the ongoing litigations with founders / promoters? In the RHP, why only CAMS is listed as your peer? What about mass services and datamatics, etc.? And the 4th question is, what propelled your bottom lines for the last 2 fiscals?
Thank you. The promoter's role post IPO, General Atlantic Partners is our promoter. Post IPO, they will continue to hold substantial majority in the company. We believe they are here for the long run. They are very enthused and excited to be in this business. They like the financial services and the growth potential that India has to offer. So we believe that for a foreseeable and a long future, General Atlantic Partners will be there with us. Their role had not just been that of investment, but as I've mentioned, a lot of transformation of this organization could be attributed to their definitive participation in the organization for its growth and providing the right kind of stability. In terms of the litigations, we have already answered that. All the litigations have been listed and detailed out in the RHP. We believe there will be no material impact on KFin Tech in terms of the ongoing litigations on the erstwhile promoter who has had no connection with this entity for the past 2.5 years at least. In terms of a listing of a peer group, CAMS is, obviously the larger listed, peer group for one of the lines of business, that we, work on, which is mutual fund operations. And for other lines of businesses such as, share transfer registry and our international operations, there is no like-to-like listed peer. Hence, we have only listed CAMS as our peer, so to speak. In terms of what propelled the bottom line of the organization over the past 2 years, it's a combination of things. First of which, of course, is rapid expansion of our revenues, courtesy of growth both in domestic as well as our international markets. Further, duly aided and supported by driving operating leverage through technological intervention as well as process re-engineering. A combination of these two has helped us to improve our bottom line. And of course, there was a certain amount of debt which had been retired, which also has helped us in terms of improving our PAT margins.
Okay. The added question is, please give us a visibility on how the value-added services will grow.
Thank you. Very, interesting space for us. And personally, I'm enthused about it, coming from the technology background. See, as an entity which supports, thousands of corporates and processing millions of transactions, and with ever increasing demands of investors, intermediaries, asset managers, every one of us, including myself, want better solutions and services. We're all consumers of the services we render to. And, it is but cliche to say that, it is only technology that can change and can bring in a paradigm shift in terms of, what could be offered as a solution and a service to a client. And whilst our business largely requires for us to manage transactions, financial and otherwise for our investors, a series of technology-driven products and platforms, we have orchestrated over the past, 4 to 5 years, largely with an intent to help my clients drive their growth, with an intent to provide some cutting-edge solutions which bring in a massive amount of delight to all the stakeholders, including, regulators, alike. We also are blessed with the fact that given we are international, many of the things that we build in India, we are able to orchestrate similar solutions in Malaysia, Philippines, Hong Kong, etc. And likewise, we have a vantage, point of view in terms of what happens in some of those economies, and we are able to bring some of those solutions and provide the distinction and the differentiation that is required, for our clients and all the stakeholders alike. Financially, we have managed to drive the revenue contribution of the value-added services from about 3.5% to 6.4% for the period ending September 2022 on the total revenue base. And I'd like to, continue to invest, both, our money as well as efforts to create several more, such products and platforms, which also gives us another, diversification and a moat, because these are not driven by the market. These are not driven by the sentiment, of the investing population. This is a purely technology play, so to speak. So very excited to be in that space.
The next question is from Ajit Singh from Amar Ujala. How was KFin's experience handling the large number of applications in the LIC IPO?
Thank you. And that puts a smile on my face. Exhilarating one at it. Honestly, it's the largest IPO our country has ever witnessed. We were working towards a scenario where almost 7 to 8 crore retail investors were going to invest, which would have made it amongst the largest in the world, in fact, by volume, if not by value. We took that opportunity, right, as a means to express our, growing tech prowesses, right? We have created first of its kind, a serverless architecture, which is actually a case study, even in AWS today. We collaborated with, some of the best of minds in the industry. We created a solution whereby the transaction processing, of course, the life cycle itself has been coming down in terms of the time that is given to the registrars to process such amount of volumes. And eventually, on the layer of listing, close to 20 lakh concurrent users are logged into our systems, and we could respond with 3 millisecond lag. For us, more than anything else, it's just vindication of where we want to be, which is to be a true TechFin company in the space that we operate in, to be globally relevant. Our client, LIC in this case, had been appreciative of our efforts. At this point in time, we are ready to handle IPOs, which are probably 10 times the size of what we've handled thus far. So very interesting journey. And a lot of those learnings are also actually percolating into other lines of businesses, including mutual fund management.
आप जितना कुछ बता रहे हैं वो सब अंग्रेजी में है. हिंदुस्तान में हिंदी, मराठी, गुजराती ये भी लैंग्वेजेस हैं, उसके लिए कुछ करेंगे आप?
We've done it actually. Right? Why don't you do that?
नहीं, आप पूछिए हिंदी में, आपको क्या पूछना है, जवाब देंगे.
वही है प्रश्न कि अंग्रेजी में तो सब कुछ हो गया, बट आप हिंदी, मराठी, गुजराती में उनके लिए जो इन्वेस्टर्स हैं उनके लिए आप क्या करिएगा?
हमारे पास 12 लैंग्वेजेस में आप अगर आप अप्लाई करना चाहते हैं म्यूचुअल फंड्स के द्वारा, तो उनके एप्लीकेशन फॉर्म्स उनकी वेबसाइट पे आप जाएंगे तो हिंदी, गुजराती, मराठी 12 लैंग्वेज है, तेलुगु, तमिल, जिसमें आप डीलिंग कर सकते हैं. सो ऐसा नहीं है कि सिर्फ इंग्लिश ही एक लैंग्वेज है जिसको हम प्रोपोगेट कर रहे हैं. ये वी आर हम बाकी लैंग्वेजेस को भी उतना ही सम्मान देते हैं, उतनी कोशिश करते हैं कि कैसे हम अपने कस्टमर्स को अलग अलग भाषाओं में उनकी जो ज़रूरतें उनको पूरा कर सके, जो हमारे काबू में है वो हम कर सकते हैं, तो और कोशिश कर रहे हैं कैसे उसको इम्प्रूव करें, कैसे उसको और अच्छा करें.
Two quick questions. One is, how will you grow your market share of the non-mutual fund business in terms of, let's say, other investor-focused solutions and services? And the other one is, which of the markets is more profitable, the domestic market or the international markets?
Thank you. So what we want to grow as a business, we're not going to say no to, growth in any business. So that's never going to happen. But, if you saw a journey over the last 3 to 4 years, you would notice a definitive and a purposeful inclination towards identifying, geographies, identifying asset classes, identifying types of businesses where there is a very large addressable market, right? So our sojourn into, Asian markets, our shift of, not a shift as much, leaning towards creating technology solutions and orchestrating a revenue pool out of it, or a significant focus to work and provide solutions for alternate asset classes and the fund accounting administration of it. All of that, points to one direction, which is that diversification, risk mitigation, and having non-linear dependency on one asset class, on one geography. Today, close to 15% of our revenues come in dollar-denominated contracts, which also provides us a currency hedge in times like this. Dollar has appreciated over the past 2 years. That also has contributed. So we're going to drive growth in every asset class. We want to be the go-to name for any asset manager in India and Asia, at least to begin with, and hopefully for the rest of the world in times to come. We will drive our growth in a meaningful and a profitable manner, both through organic as well as inorganic channels. We continue to look at mergers and acquisitions as an opportunity in addition to the direct organic growth. In terms of the second question was on international.
Which one is more profitable? That's the question. Yeah.
So the profitability currently, if I largely look at the profile of my businesses, most of them, have, concentrated around the 50 to 60%, gross margin levels, including our international operations. We believe, however, the potential for international operations in terms of higher margin may be higher, just two logical reasons. Broadly, that pound to pound, the efforts could be lower, for international operations, and in terms of the yield that is possible could be higher. But that aside, at this point in time, it's reasonably normalized to, the 50 to 60% EBITDA.
Two last questions, unless the audience over here has any more, but two last questions. One of which is, considering that you have the technology in place and therefore technology is all pervasive, leading to the question that are you open to entering into the US and European markets?
Short answer, yes. Intent, of course, is there, as should be for any aspirant who wants to be truly global. We can't and we do not want to restrict our sites only to the nearby geographies. Our acquisition of Hexagram, which largely helps us to manage the fund accounting administration side of an asset manager, provides us that window and that segue into the Western world, where the transfer agency operations is not truly pertinent given the nature of work they do, which largely operates on an omnibus model. But for fund accounting administration, it is a sizable market. There is sizable competition with several large multinational corporations, including JP Morgan and Bonnie Mellon and SS&C State Street. It's got some really big market names there. But we do believe we have compelling value proposition to be offered. So in time to come, hopefully, we should be or be intended.
And the last question is that you did mention about service, your platform as a service. So can you please give a color in terms of what exactly is that?
Thank you. So this is more about our commercial model, right, as to how we engage with our client land, our market. Different businesses have different, pricing structures. Our pricing structure is largely we charge certain basis point on the asset under management of our clients. which effectively, has the largest component of that revenue could be and should be attributed towards the platform that we have created. And we render that as a service. Even if you take a look at our technology, the platforms that we create are rendered. I think probably the easiest way to put it is any of the collaborative platforms, say a Zoom or a Microsoft Team, which we could be using at this point in time. That is as a service model. That means that any subscriber could take that platform and could pay certain amount of money on a monthly or a weekly or annual basis. And should you not like it, you can also discontinue. So which effectively means that you're not investing a significant amount of capital expenditure or a one-time fee, but are enjoying, the advantages of having a simple cost structure on a month-on-month basis with the ability to change as you move. But that provides a significant amount of resilience to the service providers such as well. So that is effectively what, our engagement model with the market as a service model.
Well, thank you for that. Now let me invite Mr. Abhinav Bhati, JP Morgan India Private Limited, to give the closing remarks.
On behalf of KFin Tech management team and all the BRLMs of the IPO, I would like to thank every one of you to having taken the time out and joining us for the press meet today. If I may just very quickly reiterate some of the key features about the IPO. The issue dates are 19th to 21st of December with the anchor on 16th. The IPO size is 1,500 crores and the price range is 347 to 366 per share. With that, I would look forward to your support as you reach out to your readers going forward as we book build this IPO the next few days. And I would like to request every one of you to join us for lunch. Thank you.
Yeah, photo please.
Thank you everyone for joining the hybrid press meet of KFin Technologies Limited for their forthcoming IPO. Please feel free to reach out to us for any further queries or email us at ipo@kfintech.com, ipo@kfintech.com, or ipo@adfactorspr.com. ipo@adfactorspr.com. We will do our best to revert to your queries within the 48 hours. We look forward to your support in making this IPO a success. Our team will reach out to you shortly with a press release. Take care and stay safe, and please join us for lunch. Thank you.